What is going on, everybody? I'm actually gonna not do this. I think Michael, can you hear us? All right. So welcome, guys. Sorry for the technical difficulties earlier. I had the craziest shenanigans happen this morning. So apologies and appreciate you guys hopping in. Give everyone just a couple seconds or a couple minutes here just to kind of hop in. If you guys are on social, this is kind of starting to go out. Twitter, Twitch, YouTube, and I think we're in server a couple places, but trying to get this out as much as we can. So like, retweet, whatever, share it if you're on the YouTube, and don't forget to subscribe. But with that, I mean, give the servers a couple minutes to kind of pop in here. If you guys don't know, I do have a special guest today. A good buddy of mine, Michael Saul from Seeking Alpha, Tiny Real over there. If you don't have him on Twitter, definitely an amazing follow. He and I are on. We actually met on Spaces not too long ago, but like huge fan out of the gate for sure. And by the way, you guys, if you don't know, there's it's papergains.com/links. Thanks to Michael and a couple of the other people, and I'll kind of put this up here in a second, we are now officially a Seeking Alpha affiliate. So if you guys want, there's a probably the best deal. It's like 60% off Seeking Alpha annual plan. So huge discount for sure. Just papergains.com/links, and you'll see it right there at the top. So cool. Appreciate you guys hopping in. Couple more minutes, guys. Just get these invites out there. See if we can get, I want to see if we can get 50 at least to start here. I know it's a little late, a little off topic. But actually, yeah, Michael, as the guys kind of and girls kind of start hopping in here, you want to give a quick overview, like, you know, Michael works for Seeking Alpha. I mean, you do you. You don't have to, you're not representing Seeking Alpha today. We're representing Mike Saul, who I am a uber fan of, no question, for sure. And he also does a Monday morning meeting every week. So I thought it'd be a good opportunity to probably have him come in. You probably unmute and then give a quick intro while they're hopping in.
Right. Well, thanks for having me. And the big fan is obviously mutual. You know, I'm a big fan of yours. Yeah. And I think everybody, you know, the value you drop is just absolutely ridiculous. Fantastic stuff. So I don't do my Monday morning meeting anymore. So everybody
really?
should be everybody should be tuning into this meeting at 12 noon.
Normally
Eastern.
12 noon. Yeah.
What? Yeah, normally 12 noon.
Right?
I know today there was a hiccup, but so you guys should definitely be tuning into this one, and I've recommended a couple of people to start coming here instead. So basically, I've been trading since 1992, I think. Yeah. I think that's when I started. I started trading commodities. I started when $45 a round turn per contract was the discount brokerage rate, by the way. I started out paying $100 a contract round turn. That's per contract, not per trade. Just remember that. The Oats margin was $150, and the commission was $100. So that was $250 just to put an Oats contract on. Anyway, so I started with a $100 round turn, and then I said, this is ridiculous. Found a discounted brokerage for like $40 or $45. And then that guy actually turned me on to index futures. I started trading index futures, and then the internet bubble came. I got into stocks, started trading stocks, started realizing I could lose my money much faster trading options. Wait a minute. Sorry. Did I say that out loud? Started watching options and seeing that there is a lot of opportunity in options, a lot more now. Back then, you were happy to have a monthly expiration, right? And I know I sound like I'm old, which I am. But I mean, I know
like SPX every day option expiration.
Zero. I mean, look. My question to you, and you're the guy who would probably be the one to give the best opinion on this. I always ask myself with things like, where are things going next, right?
Yeah.
Thousands of songs on your phone, all this stuff, blah, blah, blah. Great. Where are, we're not going to talk about technology here. That's not what this is. Where are options going? Are there going to be morning and afternoon expirations eventually?
Oh man,
Will there be hourly expirations? Right,
dude, I didn't think we would have the 0-day everyday SPX, but then they had those XSP, which was interesting. Like it's a 1/10 derivative of SPX. Didn't get a whole lot of love. So honestly, I think we get SPY 0 days next for sure.
Right. Oh, no, and that's and that's the slower progression. But what is the bigger picture? Do you really think there could be a morning and afternoon expiration or an hourly expiration? I mean,
no, that would be wild. I mean, you saw what was it? IBKR, right? IB comes out with the over and under bet, right? That's new, right? Like you can bet that 1-to-1 payout, like a blackjack. Is SPY going to close above this or below that?
That's binary options. They've been doing that for a long time, right? Yeah, those are binaries. But I mean, I don't know. Look, the difference, right, is a lot of these binary places were shady, and with this, I mean, now these 0 DTEs, I mean, they're legit. And do you see these numbers?
Legit.
I mean, 45% of I could probably be wrong, but 40 or 45% of the volume are on these 0 to data expiration options now. I mean, it's all wow. I don't know where this is going, right? And we've talked about this before, and maybe futures are better suited for some people. Look, I like them.
Futures
I
for
love
sure
the
for
0
scalping.
TTs. I love the 0 TTs, but I also love the futures, and I just think you could put a little bit more control in place with the futures. But then the 0 DTEs also give you that advantage of not stopping out on every wiggle, right? So it's I don't know, but anyway.
I definitely think that the next evolution of the Gen Z of the Gen Z / early millennial trader will probably be 2 futures. That's my guess. And then if they stick around, they'll probably see a little Forex. but that's, prop firms definitely the next wave. Prop firms for the futures traders. That's absolutely a huge thing. But appreciate you guys hopping in. We got about 35. If you could get that up a little bit more, shoot those links out, definitely on YouTube, whatever. But let's get this started, man. So again, Michael and I in finance for a living. And basically, what's important to do for sure, especially for any of the younger trader that's coming out of what we call what I've heard called the Trump pump. I think that's like the funniest term, but it's a different market to trade in today. So we know you can't just buy calls and stocks go up. So you have to take a little bit of a different approach, not so much gambling, but you have to take an educated approach. You have to take, put some serious thought into your trades. And so we approach trading like a business. Like if you worked at a firm, if you ever wanted to make this a real career, you would have a Monday morning meeting beforehand. You would have to go every trade. You'll have your risk manager over your shoulder. You got to justify this, that, the other. But this is how you actually take it seriously. So with that said, I'm going to try and find some potentially options trades. We're going to keep today's show slightly shorter, so not too many. If you guys have questions, you want to take a look at some specific tickers, put them in the chat now. We'll both be able to see them, and we'll take a look later on. But again, just before you start trading, got to point out you have to call 188 options, get a copy of characteristics and risks of standardized options before you start trading, and be very cautious. So with that, I think usually I'll start this off with a little bit of a recap, right? And so if you guys are in the market today or right now, this moment, you're looking at this thing and you're saying, what is going on, right? We had a great close Friday. We had a great week last week, and now we're kind of pulling back. We're at some pretty key levels, just breaking below 200-day moving average, which is going to be a definite key level. So, and Michael, if you have any comments on any of these key data points, just hop in and jump in, and we'll just kind of play it by ear from there. But to me, there were 3 major things that were happening last week. So number 1 was this GDP estimate. And so if you guys notice on the screen right here, there are 2 things. So when you're looking at economic data, what I want to point out is the important number that's going to move markets is not necessarily the previous number. What's really important is this consensus number. And so what consensus means, that's what the market is currently pricing in at any given moment. So if data comes in, whether it's above or below the prior number, that really doesn't matter. The only thing that's going to move a market is what comes in that's different than consensus, right? And so GDP, we had our second estimate of Q3 data, GDP data, and this is second of 3. So we'll have one more later on in the year, and that'll be it. But the biggest thing here for that first kind of pivot that we saw, if you guys remember, what was this, are we in a recession? Are we not in a recession? They're like, well, we're not going to define it as a recession. But at the same time, we had 2 negative GDP prints, and that is the definition of a recession. So we went last time, we were coming in with this GDP. This last print that came in at 4.3 actually flipped that consensus to positive. So we no longer necessarily have 2 negative GDP prints in our future. So that's kind of like the whole whoop, pump the brakes. And, is something going to change here? And so with that, I think we got right after that, it was Powell's speech that same day. Same day we got Powell's speech. And that oddly moved the markets quite a bit. And to me, and Michael, this is where I'd kind of like to hear your opinion on this. I didn't hear anything in his speech that I wasn't already expecting. That's me. And so when I look at what's happening in the market right now, we have to go back and we're going to look at Wednesday's price action. And I think you can get the majority of your levels from Wednesday's price action for the rest of this week. And, I'm a big proponent of understanding the fundamentals. You don't have to be a fundamentalist per se. Move this dust down a little bit. But what I do think is important to understand is that fundamental events do create technical levels. And an event like this GDP print, and we're also going to look at PCE, and we're going to look at non-farm payrolls. Those are fundamental events that will create technical levels for us today or this week on SPY. And I think some pretty key ones are coming up very quickly. So that said, PCE came in, consensus was, personal consumer expenditures. This is really like how much are people spending? And remember, inflation's really determined really by like 3 things. And the 1/3 of that piece is the velocity of money, if you will, right? So how much money is flowing around in the economy? And that comes down to consumer spending, or just comes down to spending. There's government spending. I don't want to get too much in the weeds. But consumer spending is what the focus is right now. And that actually came in right in consensus. So Thursday didn't really get a whole lot of price action, which, based on that number, and I'm getting ready to pull up the rest of our charts here. Not surprising. The one that was the big, like, holy camole number, I didn't even realize this until we were coming in, I think it was Thursday. Excuse me. And it's our non-farm payroll number. And so non-farm payrolls, and this is where it might get a little, confusing for some people. The non-farm payroll, that's how many jobs were taken that last month, right? Or this is for November. And we got 263,000 new jobs. The thing is, if the consensus was 200, you would think that that's a good number. What's a positive number for the NFP perspective? But in this environment, we are looking at something where a strong economy, a strong jobs market is going to be negative for the actual stock market. So although, yes, it's a strong number for NFP, the market was expecting a bad number. And that was already priced in. So if there's less jobs being taken, that means there's less spending going to go down. And there's that inflation piece is a lot more under control. The thing with the strong jobs market is that if you go back to Powell's speech on Wednesday, he talked a lot about the economy and a lot about the jobs market. So having a strong jobs market gives him a little bit of room to be more hawkish, let's say, in terms of his messaging. I don't know that it's going to change anything on his decisions. I'm not a professional prognosticator, but what I will say is that I didn't hear anything new out of that speech. I don't know, Mike, did anything stand out to you on that speech from Powell on Wednesday?
No, absolutely not. And he's been saying, what baffles me, and again, this discussion has been over and over, but I'm going to assume that nobody on this has heard me. So I'm going to talk like it's all, like I'm saying it all for the first time, right? But it's probably the 100th time today I've said it, right? And the point is, nothing has changed. Even the fact that they're going to start slowing or shrinking the amount of the rate hikes starting in December. That was always the plan. It was
Yeah.
always, let's go
Always
to
the plan.
December, then we can start tapering off. That's not a pivot. A pivot is we're no longer raising and now we're cutting. To do that has to be, and I don't want to wish this on us or anybody anywhere, that takes a nuclear strike to do that.
Yeah.
It's not going to just totally pivot, go from reverse right into drive. The non-farm payrolls you pointed out, and you know, an excellent point. This is troubling because the Fed has two tools in order to tame inflation. Okay, the first thing they could do is talk it down. Good luck with that. Okay, and go to the grocery store and tell me, okay, that inflation isn't that bad, right? It's ridiculous. Okay, that's the one tool they have. That ain't working. The second tool they have is to raise interest rates, and the only thing they can do is start to suffocate or start to choke out demand inflation. They don't drill for, the Fed doesn't drill for oil. The Fed doesn't plant crops. They do not do anything on the supply side. All they can do is temper the demand side. And if jobs are strong and hourly earnings are up 0.6%, people are making more money, you know what they say? F it. It costs a little more, but I'm making more. So what are you going to do? That's the price of making more money. It's going to cost me more money. And people aren't going. That's why Powell is so big on, and it sucks to hear him say this, right? Because like I've said, this is a guy, number one, with job security. And even if he got fired tomorrow, he'd make 10 times as much giving lectures for the next 2 years. Right. So this guy who wants everybody else to lose their freaking job so he can help tame inflation, he's set for life. Right. Even if he's not set for life financially, he'll go out on the lecture circuit and make a lot more. He doesn't care if he loses his job. Right. So, again, I'm not a Powell basher. He's got the two people I don't bash, believe it or not, are Powell and Jim Cramer. I don't see the point. Right. Anyway, but Cramer's for another time. Right. Let's start with Powell. Powell has a very difficult job, okay? You'd like to think that he was autonomous and but with the help of the governors and the other Fed members, right? But basically, he's getting pressure from the administration as well, and he should, right? Biden is looking to get reelected. He doesn't want the economy completely out of control.
Very true.
So all right, so regardless of all this, I did not, everybody like, oh, well, he wasn't as hawkish as he was at Jackson Hole. What does that mean? He still said, I'm going to get the job until we're going to continue to do the job until the work is done. That means he's going to continue to raise rates until inflation has been dampened enough. Now, the problem with the Fed is they are slow to act. Inflation is transitory. Inflation. Oh, whoops, it's not transitory. Let's start raising rates.
Well,
okay,
maybe it is.
Right, and then when do they stop raising rates? Probably when it's too late. I saw a headline today on CNBC. Dow falls on fears that the Fed will continue to raise rates even during a recession. Of course they're going to. Of
We're
course
actually going to get into that here in a little bit.
During a recession until they finally realize, whoops, okay, we're in trouble. Let's stop. So anyway, I probably talk too much, but that's what you asked.
Now they see why I love Mike, and I love this. Mike is the best. I mean, this is definitely some of the commentary that's, it's fun hanging out with Mike on Spaces or if YouTube now or wherever. If we had a radio show, I'd be tuning into Radio Mike all day. But it's fun commentary. But the thing is, it's all legitimate, right? And it's like, all I can say, man, huge fan. Everything he's saying is spot on, right? At least I'm very much, we're in violent agreement across the board here. And I want to get into some of this stuff. So and I'll typically look for some kind of, positive headlines. There were some positive headlines, don't get me wrong, right? Like the rail strike is averted. That's good, right? That's a huge positive, right? We talked a little bit about oil last week, and coming in on, we talked about European sanctions on Russian oil. I do want to point out, European Union did put a $60 price cap on Russian oil, so that will come into play. And I have this target on crude futures, likely just under 70, give or take. But right now it's just kind of bouncing around, right? I think we come down there, we'll get a shot, or take another shot at some of these, my favorite, like OIH type plays, things like that. But for right now, don't think that they're breaking out, right? Be very careful, right? We're coming to this point in the market. We're going to be choppy, right? I don't know that we're going to make new highs or new lows anytime soon. But for right now, really, it's just when you hear economic data, what I do want to point out is anything that has to do with costs that could kind of tag into inflation. So we're going to look at a couple things. Jobless claims typically or recently have not had near any effect on the market. I think that's going to start to change, right? You look at let's say average hourly earnings, right? That's started to make some moves in the market, right? Why? Because that's going to have a huge effect on companies' costs, their bottom lines. Well, what the market's not necessarily talking about right now, they're not talking about the credit situation that could be coming up. We just started, right? To this last weekend, I got a headline, banks tightening their lending standards ahead of potential recession risk, right? But what's important to note is that the real economy and the stock market completely, like, they're disconnected. Right? The stock market's going to bottom well before a real economic crisis happens. And honestly, by the time the stock market bottoms, that's probably near the low in the real economy. And so when times are worse, that's probably when you want to pick up some stuff, right? Or at least get your shopping list and take a couple shots. Consumer confidence already 4 months low, right? Housing prices dropping 5 months in a row, right? So these are things that don't look good, but again, how much worse can they get? That's what you want to think about, right? And to Mike's point, this is where the market kind of took a turn, right? And it's when Powell starts saying, smaller price hikes in December. So that was stated, right? That's kind of like it's baked into the market. And if you're trading post pandemic, around the pandemic era, we lived on this specific site, right? Like the FedWatch, CBOE FedWatch tool. This is where you want to go. This is where you want to find most of what the market is currently pricing in today. And I just took a comparative chart, a screenshot. I'm not looking at December anymore. So what I'll say is that December, the market had priced in 75 basis points for a while. And that was kind of like, is it going to get worse? And then right now all right, I'll pull it up. My guess is that you're very close to a 50 basis point being priced in for December. 75%. Where are we at, Mike, right now? We're probably about 400 basis points.
We're at 4, right. Yeah. No, we're at 3 and
3.9 something.
Yeah, 3.9 something. Yeah. I don't
397, 375, 3.9. So this is a 75%, and I'll kind of zoom in. 75% probability. So meaning that the market is pricing in 75% probability of a 50 basis point hike, not this week, but next week. And this is an important date. So I think it's the 14th of December, I believe, 13th or 14th. We're going to get the actual FOMC meeting the day after we actually get CPI. Interesting. And it's about 75% probability that we're going to get a 50 basis point hike. There's still about 25% to go, saying that we might get a little bit more. I think that this probably drops off and, we get near 85 plus probability. If I hit compare, right, you can see like, where was it, right? So the dark blue is like right now, and each column to the left is kind of like where, the week prior. So we were here, really here, 75 basis point probability, and we popped up just slightly. The one that I think is important to point out, because now we're looking further out. So the question is now, are we thinking that the Fed is going to do 25 or 50 in February? And I think that's really where the market's kind of getting, hung up. And that's that comment. Do we go 25? It was markets pricing in 50 basis point December, 25 February, and they were getting to like no increases later on in the year. And what Michael's talking about, a pivot. Okay, a pivot means you're going to drop interest rates. That's not happening. It's not happening anytime soon. So it's like, how fast do we get to the quote unquote terminal rate, right? And that's really the question. So what changed just slightly is that we are looking now. So these little bumps up here are more like a 50% probability that we have a 50 basis point hike in February, and then 25 and very low probability. Do I have this right? Yes, it's got to be 25, 50 basis point, and 75 basis point. For whatever reason, this hiked up a little much. I think, is this going to go higher? Probably not. We're not going to have 70. I don't think that there's a real probability of having 75 basis point in February. But you never know. I think that's what the fear is. So where do you see that? Today, when we look at the charts, and I'm just going to pull this up real quick. This is this Wednesday candle that we were talking about earlier. And I'm just going to switch to a 30-minute clean chart here. And you guys can see, like, this is a big day, right? And anybody that's watched this, whenever something moves the length of an average week within a 24 to 36 hour period, expect a lot of chop. So this orange box, and again, if you've watched this at all ever before, you know that this is an average week's range. And what happened? We moved the length of an average week in a couple hours. And what happened after that? Basically chop, right? Very much sideways the day after, little dip, but closing pretty much right where we opened the day after that. So this is the chop. Now we've had a chance to breathe. And I think what you're looking at right now is this market kind of saying, hang on, did Powell really say anything that should actually change, right? So was this fundamental event something that justified really this big old, press upward? So right now, I think the market's just saying, no, I don't think so. But once we get to this level where we broke out, and so that's level, this is going to be super important, right? And if you're familiar with price action strategies, people probably understand something called, or know of something called the fair value gap. But 395, and I'm looking at a SPY chart. So this morning, Michael and I were on Spaces, seeking off space with Wolf. 302 was my level on SPY. Why was 302 my level? It's right here, or 402. So this is that prior consolidation high right here. Let's see if I can get some drawing tools out. Right here, right there. Also, where we bounce right on the money on Friday. But today, once we broke that level, it came back. It was a very quick retest, barely anything at all. And it was just like a down, right? So where do we go down from here? We go down and we fill what's called the fair value gap. And it's very likely to 395 is just from a price action perspective. Trade's probably coming to a near-term close. Not a lot of meat left on this bone, especially with all this momentum. But that's essentially where we're looking for right now. And so what do you do with this today if you're looking to trade something for this week? So you look at this level here and you say, once the market's pulled back, all of this Powell noise, right? Does it digest? What happens, right? And so unfortunately, we go back right into this channel, actually into this lower channel here, right? Where the market needs to decide. It's called a fair value gap because the market didn't have a chance to decide what value was in this kind of level. It just moves so fast, right? So from here, and it's going to be 400.9, which is this pre-market low on Friday. Until we can get back above this level, I can't actually be looking really, really long. Unless there's a stock that's bucking this trend, and we will go through those. I see some of your watch list requests up here. But for right now, we could probably base out. And what we want to do is like, well, all right, well, let's get back to the rest of this week, right? So what's going on, right? Pretty much we've had all the Dow 30 components already report. Oddly enough, it looks like we might have actually, we had 26 so far. Dow components are actually reporting hitting expectations, which is actually more than I thought that we would have. Coming into the Santa Claus rally, typically we're right here, this little kind of dip. So am I looking for a big flush? No, not necessarily. I think as you look at the week ahead, so Monday, today, really nothing. None of this, I only put red in terms of what data is actually market moving. And it's not, we really don't have anything until the very, very back half of the week, and that's going to be PPI. We used to get, Michael, correct me if I'm wrong, I feel like we used to get PPI right after CPI, but recently we've been getting PPI.
All over the place, yeah.
So it's kind of bouncing out. So we actually get PPI on Friday.
Yeah,
we just got PPI, but we're going to get it on Friday again. And that's going to be more of I wouldn't say necessarily leading indicator, but it's not a lagging indicator, right? So we just got PPI recently. That number, we'll take a look at the economic calendar, see what's being priced in today, and we'll just hop straight over to that. And I think that this kind of exercise is what's going to be mostly important for our prep for the week ahead. NFP productivity, labor costs. So what I did want to point out, anything that has to do with rising costs or inflation, those are still going to be the things that you want to pay attention to. It's going to be a little bit more nuanced, in my opinion, right now, just because, especially this week, there's really not a whole lot there. We're in a Fed blackout period because of FOMC next week. So what does the market really have to look at? They have these things: labor cost and jobless claims and PPI. So this labor cost, jobless claims, PPI, those are three things I think will that you'd want to pay attention to, basically, moving forward. So let's get out of this. And I'm going to pull up just a quick economic calendar since we didn't have a whole lot of this. So again, today, really nothing. Manufacturing services, PMI, anything over 50 is kind of like expansion. That's fine. Balance of trade tomorrow. This is like, it's a nothing burger, right? So nothing in our way tomorrow. By the way, if you're wondering like why we always have a negative, have you ever seen us being a net exporter? Like, I don't think I've ever even heard of us we'll never be a net exporter, so don't worry about that. And we get into Wednesday, right? Unit labor costs. So here's the consensus. So prior we were sitting at, and let me zoom this in a little bit, see if that's a little bit better. So Wednesday, unit labor costs, Q3 estimates, prior 8.9, consensus is 3.1. So the market's actually pricing in, what this is telling me right now is the market is pricing in that our labor costs are actually going down. So that's a little bit of good news. Makes me think that 395 could be in range sooner than later. And then we want to look at jobless claims. So initial jobless claims. And what jobless claims is, that's people filing for unemployment insurance or continuing unemployment insurance that already had it. So why does that matter? This is, again, it's just that kind of like who's going back into the workforce. I don't expect a whole lot of movement. Looks like the market's not pricing in a whole lot of movement one way or the other. So if this does, and 230,000, that's the number that the market's pricing in today. If this comes in, I don't know, it would have to come in at like 285 or something like that, or sub 200 for that to move a market. So thankfully, this number does not look like it's going to be moving markets much. Just going back to my stuff. And maybe this unit labor cost, I don't know why this consensus is so low. That's a little concerning. This one actually is a little, it's kind of mind blowing to me why we think the unit labor cost is going to be down that much. So maybe Wednesday when we get there. And then this is going to be the big one. It's the month over month core PPI. So core meaning, there's headline and there's core when it comes to CPI and PPI. Core does not include things like oil, food, rent, all the stuff that we actually spend most of our money on, the stuff that matters. They don't count that. So that's what the headline is.
I'm sorry. Are you sure not rent in core? I thought it was just energy and food, but I don't know. I'm not questioning you.
I don't think so. I could be wrong. So I'll say for sure, most of my food goes to gas, and most of my money goes to gas and food nowadays. I'll just say that. But yeah, so it basically they don't count what they consider volatile, right? So fuel, food, like fairly volatile things, they pull it out to make it a more stable number. At least that's what the logic was way back when. And then they call that the headline number, which is, it just doesn't say core. But
right. No. Food and fuel, I agree. I thought rent was part of core.
I don't think it is, but I could be wrong. So I don't want to say one way or the other for sure.
Okay. Yeah, no, that's fine. Because if it's rent, that would make a little bit more sense. But right, I agree with you. We tend to spend. I mean, we really don't, right? If you look at what the spending is, fuel is only about 6% of our actually spending. It's just, we get punched in the face with fuel costs every day because there's a million gas stations, and you just, oh my goodness, look how expensive gas is. But in the end, right, it's not really. We don't spend that much, but we it seems like all we're doing. I mean, I know I just filled up my car for the second time this week, yesterday, and I was like, wow, this is crazy. So yeah, it definitely hits you. I mean, it definitely has the emotional hit for sure. But anyway.
Yeah, for sure. I had like a 16-gallon tank, and sometimes it cost me $100 to fill it up out here in California. So it's like, holy crap. And then I go to pay, and it's like they pre-approve $100 on your credit card, but that's not enough to fill your tank. And it's like, your transaction stops. And you're like, I haven't even filled my tank. Anyways, yeah, that's life in California for you. Where were we? So I'm gonna go back to this economic calendar. So PPI, this is to me, this is going to be the important number, the month-over-month number, really. And so this is why is PPI going to be important? It's not going to necessarily move a market, but I think it will help determine what's the next direction, right? And really, so we were flat last week or last report, and so the market is pricing in consensus. Remember, market is pricing in 0.2% up. If this number comes in negative, if this number comes in negative on Friday morning pre-market, that's the match that's going to light this firework, setup that could potentially take us. I'm going to say we'll measure this in a second, but it's probably somewhere around 420 if we do get this next pressed higher and don't break below that 395. That's what's going to be important on SPY. And I really, if this PPI number, this is the most optimistic setup that I can see from a fundamental perspective. If it comes in negative, though, and I don't mean like 1/10 off, if it comes in at like 0.4%, like positive, which would be a negative correlation to us, that would be, then we probably see 375 sooner than later. But that's going to be, for me, my biggest thing. Unfortunately, this doesn't happen until Friday. So between now and then, we're going to have a lot of this chop in between, as we lead up. And Andrew, one of our buddies, was talking about, he called it the river card, right? What's the market going to pull out on Friday? We could get hit with the river to the face river to the upside. Very likely. One way or the other, this river card is probably going to come into play. And then we get right into the following week. So if we do get this pop, again, it might be fast and furious, but take the profits quickly because we're likely going to chop, because right after this week, we get hit with this FOMC meeting. And that's going to be, after that, then it's like, okay, we'll probably see a little bit of a trend, but really not until that time. So we get CPI for November, on the 13th. And this is where it comes in, FOMC, right? So right now, forecasted for 4.5 on the rate decision. So it's pricing, and we're pricing in 50 basis point hike right now. So we'll see. And then that conference. So this is next Tuesday and Wednesday. Tuesday, I'm only mentioning because we do get CPI. We do know that that's what he's going to be looking at. And then once this is behind us, I'm guessing a lot of the conversation is going to go to that balance sheet, and it's probably going to go to credit situations. So that's all I had on that front. Mike, did you have anything you want to add on the FA piece of it?
No, I really like the way you're setting up. You set up that chart because it looks like today, right? And of course, we're not predictors. We're trying to be prepared, and we're trying to do what we have to do. But it looks like we'll probably, unless there's a face ripper coming out of nowhere here, looks like we'll continue to grind down as we've been doing here. But when we come into your fair value gap, your area that you're looking at, a lot of people can be watched what I call the pendulum, right? So the pendulum is, we were consolidating over here. I don't know if you see my arrow or not. Do you see my arrow? No, just your arrow, right?
Yeah.
So the consolidation before your breakout?
Right here?
Yeah, this consolidation. So what did we do, right? We're looking for a move either way. And the first way was up, right? We moved up. We did a week and a day, half a day, right? We did a week's
right here. This whole situation.
This whole day we came up. So what happens now if we now break down out of it, right? That's what I call the pendulum, right? So the pendulum swings one way up. Everybody's like, okay, hey, we're gonna go, we're gonna rally. Here's Santa. And then what happens if we come back down the other side? We could get some acceleration to the downside, and that would really line up nicely with that Santa Claus rally that that little dip you showed in the Santa Claus rally, and that could be right. It could look. My opinion, doing this for a long time, is the market tries to screw over as many people as possible, and market does the most obvious thing in the market does the most obvious thing in the most unobvious way, right? So the most obvious way here is we broke out last week and we just keep going higher. Okay, this is easy, right? All right, and we saw some of that during the COVID rally. We saw some of it. Wow, look, we just keep going, right? But a lot of times we'll like to trap people, and I think some people are trapped on the upside. I wouldn't be surprised if they trap some aggressive people on the downside, and then see what happens from there. I think your fair value gap is a very, very critical level to watch here. I think it's probably I mean, I'm being sensationalistic here, but I can, right? Because there's only 26 days left in the year. It could be the most important. It could be the most important fair value gap of the year, right? Because
I'm right there with you. I'm like, I think that this 395 level is going to be the level for the rest of the year, right?
Yeah,
Like,
I agree. I agree with you.
The main level to watch for the rest of the year, no question, right? And here's for any like intraday price action traders or like very technical swings, one thing I do want to point out. So yes, this is a fair value gap, right? Where the market needs to figure out the value in this range because it didn't have a chance to before. This is Monday. Last Monday's low is so we look for something called order blocks, right? And that's where essentially, where did the buyers really step in? So if we get right here, so at this is 395, and to be very to the penny, 395.11, right? You have this little double bottom right on Monday's close, right? 1, 2, right? And this is a prime example of what is this major kind of order block look like, where we're looking for. I can read it on price action, right? I don't need any special level data to show me this, right? But right here, 395.11, this is the low right before the very last low, 395. And then we got a higher low, and here 394.81 is where they broke, where they really just like went crazy, right? And so and it really kicked in right here. So what I would say is the fair value gap probably to 395.50, give or take. We might undercut that just slightly, but right here, there's whoever didn't get filled right here and missed this big rally, and they still have that bull case in their head. They're going to have orders sitting, resting here at 395 and change. I mean, a couple pennies change. So this level is going to be very, very critical. 395.11, right, on SPY. If you do get down to this level, right, I want mark the charts, put your alert there. If that tags, what you want to see is you don't want to have an order resting like they do necessarily, because look, if it goes below 393, guess what? Everybody that just bought is going to boom instantly sell, and you're going to get flushed. So wait for it to bounce, watch for that, and then you want to see a higher low immediately after that. Almost like we saw on Thursday, on Tuesday, Wednesday. So low, slightly higher low Wednesday, and then we take off, right? You want to see this kind of price action. So what that would look like, it looked like a low right here at 395, and then a higher low right around 395.50, which would be that fair value gap. And this right here, 395.50, that's where you want to take your shots, not necessarily immediately at 395. And don't get me wrong, go for it if you wanted to. But and you're really just kind of trading for this 399, that's your first target. And look, this risk reward is 5-to-1 risk reward. So I'm risking, 1 to make 5. This is the kind of trade that you want to have from a trading perspective, not investing, strictly talking about trading. If you're going to play this fundamental level to fundamental event, creating a technical level. For now, we're hitting the bottom of this kind of consolidation. Your first trade is more or less over, right? And so for here, yeah, you could trade one more time, but you have to see it break down below 396. So that's the SPY. So I want to take a look at two others. So there's the VIX. We're option traders, always having the VIX up here, and we're going to kind of speed this up just a little bit. So the VIX has been on this kind of dissension for quite a while. What this means, when the VIX is around 20, typically we get a nice healthy chop to the upside. But when you're coming down from 35 to 20, what that means is really we're getting a lot of indecision, but your volatility is shrinking. Your premiums are shrinking on your contracts, and that's actually a better setup to sell premium in options. We're sitting at 20 right now, possibly looking like we could pop a little bit. That, to me, is actually probably a better. It means that debit spreads and things like that are actually going to get a little bit cheaper for an options trader. So long options, not so bad from a pricing perspective. And if we can stay, actually this 200 week, this is the VIX, VIX, by the way, not UVXY or anything like that. Michael, I think you froze, so I'm going to pull you down for just a little bit. Oh, you're back. All right. So 200 week right here, 22, about 22 on the VIX, not UVXY. As long as we could stay below 22 on the VIX, I still think, hey, we could chop and probably not necessarily break below that 395 on SPY. Clearly, if that 395 breaks, you'll probably pop up on the VIX just around 30, something like that, more likely than not. And then the most important chart to me right here is the Dixie of the dollar index, right? And so this morning we were talking about with Wolf 105.50 level for the Dixie or DXY. So 105.50 comes from right here, right? This is last week's high. So I think we could come up just a little bit, and we have another little setup. Or look, we popped just slightly. Excuse me. But as long as we're below this, this would be one more lower high. And I think, wow, this looks like we might be coming into it like right now. And if you get super minute micro, if you want to play these fair value gaps, this is actually a fair value gap right here on the Dixie FVG for fair value gap. Is that nearly tagged it? Maybe I was a little too precise. Typically just want to take the low right before the high, somewhere in there. I don't know if that's it. Oh, it is it. So that hopefully that turns out to be the low on the high on the Dixie. And if that's the case, my first shot, we're going right back to what? Actually going back to gold. And so like that's the one to me that actually has some decent momentum. This is not the right gold. GC is gold futures. And so we pressed right over that 200-day moving average. That's the red line on my charts here. We're above the purple line. If you can see it, purple line is a 200-week moving average. And there's a little blue line underneath it. That's a 50-day. Yeah, 50-day moving average. The gray one's a 20-day. And I know Mike uses some of these like moving averages also. But to me, what I want to see is I want to see these moving averages kind of like converge and shrink like real close together. And right before they expand. So the key ones, if these two expand right here, that could be enough to kind of push this guy one more time right back over that 200-day. And this gold chart, if you don't know, I'm just going to throw it on a weekly. That's a big time deal, right? So this 200-day, we just hit it right now. This guy, and if any of you have missed the gold trade, I wouldn't be too worried about it, right? Like I think this still looks like it's on. Broke out, come back. And if we're retesting, right here on this prior high, 1777, I see 1780. Let's get back to this. You know what? We can use these same Wednesday levels. Was it Wednesday? Yeah, we had this gap Monday, Tuesday. Look at that. Wednesday. Same kind of levels. Here's our fair value here. We could get this, but if this is topping out on the Dixie, right around here, this is a nice spot to take a short little upside trade. Literally right now, actually, that we're looking at. Assuming we stay above 1778 on gold futures. That's my line right there. So 1778, if we're above that, that's where I want to take a shot. I could take a shot actually all the way up to 18 and then stop. Either downside target, if we do get below 1778, would be 1766 on GC gold futures. GLD is the ETF that tracks that. Super similar. You're looking right now, we're right about that same exact level. Looks like to be about 165. Give or take. So today, probably looking for some new swings on gold. And then one other one, XAU, it's the gold silver ratio that I do want to put out. You ever look at this, Mike? Not many do. But the gold silver ratio, this is going to tell you who has the strength, which one of these has the strength. Right now, silver actually had a little more beta, and it typically does if we do get a heavy rally. But right here at 77, I'm just going to put a quick little alert for me. So if this ratio gets back below 70, call it 75, I'm going to look at some silver trades actually for a little extra beta. So I would throw that alert right on your charts right there. Cool. So I'm going to pop in here. So it looks like you guys have a couple Morgan's asking for Walmart. All right, so Walmart, I'll take a look really quick, and we got a couple minutes, and then I'm gonna look at someone asked for Pfizer, then I'll do Pfizer. And Nick, he's asking for GDXU. I think you could do that one. We'll see. So Walmart. Here's the thing. Walmart. I don't not like Walmart, the stock, but there's this thing with the Walton family. If you guys don't know, man, every time Walmart gets around this price, all you see is insider selling. 1, 2, 3. So 1, 2, 3. This is Allison, Jim, and Rob going at it. Heavy, hot and heavy. So each selling 1.3 million shares on November 30th at 152, and then came in right behind it on December 1st at 152.55. One more time, selling 500,000 shares apiece. So to me, like, that's just like, this is typically they're saying, okay, well, there's enough, they don't necessarily see the upside. Who knows? Just speculation, because we're the prognosticators, the great prognosticators that we are. And I think my screen share just failed. Let me get back here. So Walmart, I had that 150 level. Clearly 152.50, that's about where they're selling. We can see pretty much all of that up here. And this is a multi-time view. When I'm looking at swing trades for something like this, I want to look at multiple time frames. So on the bottom, weekly chart, bottom left, weekly chart, bottom middle, daily, bottom right, hourly. And then, this top one, I want to get a big long picture of maybe like, a week or two, right? And so you can throw your 30, sometimes a little 15 on here. But so on the weekly, what do we see? On the weekly, we see a lower high, right? Little bit concerning, right? Kind of, if you want to do that fair value gap stuff one more time, just slapped it right there. We're coming back into this prior consolidation level. It's a very extended rally in terms of the slope. So if you guys don't know, like the steeper the slope, the less strength the rally really has, and the bigger the break will be. So just caution there. Daily.
That's right. Grinders are the most powerful rallies. That's right.
Yeah. So
the more chance it has to bust.
Yeah. So I want to take a look right now. 152.50 we know is going to be the top of this range. So if it does pop again up there, that'd be a nice place to take a shot. For now, I did have a small short on that I took down in some small profit, but really I'm going to take this low. What is that, Thursday that we're breaking? And we're bouncing right now. So if I see this break here, retest, then I would take a short at 150.70. But until then, I would kind of like, it's still kind of chopping in this consolidation zone. Until then, it might have a little bounce, and a better shot would be near that 152 and change level, right on 152.80, for it likely to kind of stall out. So top of that consolidation is going to be right here, 152. Call it, I'm going to try and get this, call it 60 right here. And then below this 150, that's when that consolidation range is broken. Pfizer, on the other hand, we want to take a look at something a little bit different. So Pfizer, if you look at the sectors that are stronger, and I'm just really just going to take a look at just the spider sector setup. Looks like healthcare, it's down, but it's down 1%. Not as bad as the rest. So utilities doing okay. I'm gonna take a look at the 5-day. So healthcare been strong, 2%. Discretionary fairly strong. Communications, but probably healthcare is going to have a little bit more catch up too. And it's going to be in terms of like, where do you want to take your kind of rotations? So clearly a little profit taking in some of the oil services, things like that. But we had kind of outlined this chart not too long ago. The first break of this big old downtrend happened right off that 200 week, right? That we were looking at, kind of popped up over. And I think my first entry for equity perspective would have been right here. And I know I'm going fast, but we're essentially taking those order blocks, right? Order block here, tag right there, 46.28, right on the money, bouncing after breaking that trend. Kind of came back up, went straight through that 200-day, and then we can kind of move on from there. Looking like potential squeeze on the week, Definitely got a little bit of one last week. And so what I want to do now, and just in terms of this channel, is look at the channel, right? So right now we're getting this kind of clean uptrend. Someone was asking about 51 calls. Let me see if we can find it. Avi asked about that. Let's see. Anyways, I do have 51 calls. I haven't actually closed them quite yet because I think that we could bounce. This orange line is a 20-week. It's not super important to me, but as long as we're kind of in this little bit of a channel, it's just, options on Pfizer are super cheap. And I don't have my Thinkorswim up right now. What I would say is I have an option on that's like way out there. I don't know if anybody knows. It was like June or something of last year, of next year. 616, 2023, 60 calls. Not exactly a leap, but it's as far out as you'll ever see me go. And there's one reason why. And that's because the volatility on Pfizer right now was like 6th percentile IV. It's as cheap as this thing ever really gets. And in terms of the market in general, and I'm an option trader, I want to know where are the places in the market where I can put my money down and get paid out a little extra. This is one of those places. So, maybe a little old school place to go. You can go Market Chameleon. Always does a quick IV. Look at this. IV rank, 1%. Dirt cheap. Rarely will you ever find options this cheap. And I mean, in general. And so why, Pfizer's got earnings out of the way. They don't have earnings until next February. Sure, you could day trade it. But look, this setup right here, I don't even need to spread off on something like this. It doesn't necessarily make that much sense, right? I definitely don't want to sell puts for an investment perspective because look, if IV's this low, it's likely to do what? It's likely to pop up again. And I want to be long options in this scenario. Very, very rare kind of scenario that you'll find, but this is one of them. You wouldn't know that unless you're looking at something like this, which is that, relative volatility index for the underlying. And it is reflected in the shares. So I think we are good. Pfizer's still in this clean uptrend. As long as it's here, I'm good. I'm probably better for some longer ones. Very rarely will you ever hear me say that. But I think I think that's enough for today. And then keep gold on the watch for sure. Nick was looking at a couple of you guys looking at NEM. So yeah, I'll take a quickie at NEM again. So this is gold miners. I still think, look, we're above this key level. Give it a second. It's going to have to consolidate. This thing is in a it's not multi-year, but it's in a massive kind of pullback level. And so right now, as long as it's above 47, here we go. It's a marked up chart for you. Excuse the lines, but it is what it is. Maybe it'll help you out a little bit. I take some of these. Anyways, I'll just leave them on. So this key breaker structure, right, was at 43. If you didn't catch that, that's fine. Your next entry potential point is coming in now. So if we do get this stop on the Dixie where we are, DXY, which looks like it's coming in right about now. As long as the Dixie doesn't go any lower, this should be kind of like your bottom on NEM or gold rather. And then the other factor to something like NEM that's in the gold miners is going to be crude. Again, this is kind of like I don't think crude's going back up. And if it does, it's not going $100. So it's a safe entry, in terms of NEM right here with the macro environment, as long as the dollar continues to at least go sideways, doesn't have to dump. Crude staying here, gold not going lower, and the Dixie not going higher. That's the best scenario for NEM. Again, this one, not a great day trader, but in terms of where are you going to take your shots, this is right at the top of this prior consolidation from mid-November. So we want to see likely an inside day tomorrow, or not likely, but that's what we want to see is an inside day tomorrow, something that kind of bounces right off this level at 47. And then the day after that, if you get a green candle out of the gate, it's going higher, technically speaking. And you have a lot of you have a lot of room to the upside here for sure. It's the slow mover though. So for me personally, I'm more equity trader here, collecting a nice little 5% dividend, which pays out on the 7th, by the way. So today would probably be the day at the close where people start to. I'll keep this one on heavy watch for at the close. Actually, if we see some heavy buying coming in, it might be at that level, just because of that div payout. All right, guys. Cool. Mike, appreciate you, man. You rock for coming in. We went a little bit long. Thanks for your time, dude. And honestly, guys, like check out, let me see, where's our banner? So it's papergains.com/links. Take a look at that. There's 60% off Seeking Alpha. Huge deal. I think it's, what do we got up there? And yeah, man. Mike, you want to give any closing comments to the guys, anybody who hung in for us this long?
No, just thanks for having me, and it was great and great analysis. Always love hearing what you have to say. So thanks for having me on. Appreciate it.
Yeah, man. Appreciate you coming in, dude. We'll have to have you on more often. All right, guys.
Okay, you got it.
We'll see ya. Adios.